Both the Genius Act and the Clarity Act passed in DC. Altcoins and NFTs are exploding, and even JP Morgan is eyeing crypto loans. We're going to break it all down. I'm Mick. That's Mike. First of all, Mike, before we get started, you've been away. How does it feel to be back home?
Yeah, I had a pretty awesome trip in Europe. Kind of bounced around a little bit, did some hiking in the Austrian Alps, had some meetings in Munich and Zurich, and then hung out in the south of France for a little while. So it was a lot of jumping around, but lots of fun. But now back to the grind.
Yeah, I saw some pictures. You were even hosting events that are
Yeah.
Web3 related. So you just can't get away from your work. I see it. You live and breathe this stuff, which, by the way, we also have a meetup, well, a virtual meetup, I should say, that I'm going to announce at the end of this show. But yeah, carry
Cool.
on.
It's kind of sometimes the blessing and a curse, though. Like sometimes tough to completely disconnect, but definitely I am appreciative of the opportunity to do something that I love and be able to have work and play combined.
Absolutely. And it is tough to unplug these days because there's a ton of stuff that's happening like literally on a daily basis right before our eyes. So let's catch everybody up. So first of all, the Genius Act and the Clarity Act. So what are these? In a nutshell, these are the first major US laws that give crypto clear legal status and provides rules for stablecoins and essentially a framework for the entire market oversight. The goal is to remove any kind of uncertainty for teams that are building, for investors. But Mike, why do you feel like this is historic? Like, what's really the significance here?
Yeah, so let's dig into each of these a little bit on their own. So the Genius Act is now law. So, it passed the House on Thursday by a vote of 308 to 122. So it's clearly very bipartisan. And then Trump signed the Genius Act into law shortly, the next day on Friday. So this is the first significant crypto focused legislation signed into law. It just puts a lot of rules around the use of stable coins on and how they are backed and consumer protections. We have spoke about the Genius Act many times in other episodes, so we can look back at those for more information. But then the Clarity Act, which is this overall kind of market structure act, the House voted 294 to 134, approving that on Thursday as well. And now Senate Republicans continue to work on the Clarity Act for overall better crypto market structure regulations. And you had mentioned that this is overall. Trump actually said something pretty funny when he signed the Genius Act into law, saying that like a lot of these you crypto operators and entrepreneurs were like being arrested for no good reason, and that's true. That's true. And I think this is what Clarity Act is going to help clarify, is really how to operate, how to build in the United States. What are some things that there's been the whole is crypto a security? Are these token securities that have really hampered what builders can do, and sent a lot of talent overseas? And I think the Clarity Act is going to help take out a lot of this opaqueness for how operators can build their companies in the United States.
I was talking to somebody that supposedly got an offer from Pump Fund to do business development work. And he was like, look, I'm not
Okay.
trying to go to jail. So this right here is a prime example of the clarity that we need in the industry, because nobody wants to go to jail for things that we don't know that are wrong, right?
Yeah.
Majority of us have good intentions here. We just a lot of times don't know what we can and can't do. And up to this point, we haven't really had that kind of clarity. And so, yeah, I think overall this is exciting for both investors, for people in the industry. It's great to see for sure.
Yeah, and there, and and founders have taken a couple of approaches, right? There are the ones that just like powered through. They, some of them got sued and then they fought back, and then there are others that just said, "Hey, I'm not messing with this. I am going to uh, register my company, somewhere overseas in the Caymans or BVI, or Dubai, and operate my companies out of there." And I just think that this is such a welcome development across everywhere, because I think a lot of people, the government, many people in the government realize that, look, crypto is the future, right? Like there's so much innovation happening here. There's so much possible impact, that why would this country want to scare the best talent away and push them overseas? And that's obviously very welcome for founders and operators building in crypto. They don't want to go to jail, or even just operate with that cloud over their heads. So I think this, both the Genius Act as well as the Clarity Act, the progress that DC has made on both of these is immense, and super appreciated on all sides.
The market is reacting pretty quickly to this news. This may be a catalyst for what everyone is waiting for in the industry, which is the quote unquote altcoin season. Whether or not we're in it, that's kind of the debate. I have my personal opinions in terms of where we are currently in this 4-year cycle, as many people refer to. But I'm curious to hear from you on this. I mean, do you think this is the catalyst that everyone's been waiting for the altcoin season?
Yeah, let's take a look at some of the signals, right? So you're showing the coin market cap altcoin season index at 44. Earlier this morning, it was at 52. Regardless, these are the highest numbers that we've seen since December 2024. Um, a month ago, it was at 16, right? So there's
Yep.
obviously progress being made. And look, whatever think about how CoinMarketCap measures this altcoin season, there's a lot of factors that go into it. But there's a somewhat quantitative measurement of the altcoin index. If you look at what happened with the NFT market, right? Usually, altcoin season, and NFT season go in lockstep. The market on Monday popped 29% in a single day,
Eh.
to 6.82 billion. The floor prices for some of the blue chip collections like CryptoPunks, Pudgy Penguins, Bored Apes jumped about 25%. So that obviously bodes well for altcoin season. You look at crypto treasury companies; they're acquiring, not only Bitcoin, they're acquiring ETH, Sol, BNB, Hype, and now even Tau, BitTensor Tau. And so a lot of these signals point towards an altcoin season. You look about the passing of the Genius Act we just talked about, bodes very well for L1s and L2s, where these stable coins are being deployed. And from a VC's point of view, the Clarity Act super important, because it is clarifying how founders can operate in the U.S. And a lot of what we invest in will have tokens. Those products will have tokens associated with them. So a lot of these signs point towards an altcoin run coming, altcoin season coming, but it's going to be different. It's going to be. It's not. I don't know. It's just going to be so, the where we are in the market today, with so much, we're talking about all the institutional activity. You're talking about the crypto treasury companies, and how new users are getting exposure to crypto through very different methods than what we've seen in the past, and past altcoin and NFT seasons. It's going to be a different altcoin season, to say the least. What are your thoughts on that?
Yeah, I think every time we have an altcoin season, it looks it looks different. You're absolutely right. But I can't help but think that there are certain things that remain the same. So first of all, let's take a look at this top 100 coins over the last 90 days. Um, I mean, I do see that Bitcoin is down here at 26.89%, but this is over the course of 90 days. And
Right.
reality is that a lot of these coins can't necessarily sustain that for a long period of time. You've got the blue chips in there like Aave, you've got
Yep.
Hype in there, you've got Pepe. I mean, you've got some names, and look, you got the Pudgy Penguin token here as well,
Yep.
ranked number 2, which that could be the reason why the NFT market is starting to pop off, because but they could have been the catalyst there. So I do think that the altcoin season will be here. I tend to be a little bit more reserved to call it an altcoin season. Do I think that Ethereum is having its moment? I think it is, and a large part of that has to do with these bills that have been passed. And you look at stablecoin volume. I want to say Ethereum holds like 50% of the market share when it comes to that. So people say that it's old, it's antiquated, but reality is a lot of the stablecoin volume is still being done on Ethereum. And
Yeah, no doubt.
so naturally, that's where a lot of people are going. So I think that Ethereum will have its run, but then the part that I think is very similar to previous cycles is once again, you've got Bitcoin, and then it's going to flow to Ethereum, and then it'll flow to large caps, and then you'll have this euphoric state where all of these micro caps are going off, and that's usually when you see like GameFi and things that you just have to like recalibrate your own expectations in terms of like what's real and what's not. So like this is like a phase where you can get a sense where the attention will be. We're kind of getting like a sneak peek into it, but I wouldn't call it a full blown altcoin season just yet. But I like the debate. I like the debate. And to your point, the NFT market did see 29% daily rise with CryptoPunks Penguin surge. So the NFT industry or the vertical, or anybody that thinks that it's dead, clearly this is a sneak peek into showing that it's not dead at all.
Yeah, yeah, and I don't think we're quite there yet, right? But we're seeing the signs, and I still think there are a lot of there are a few macro headwinds still out there, and there's as much as we want crypto to diverge from macro. I don't think that's happening anytime soon. There's still wars being fought. There's still some economic uncertainty with tariffs. Rates are still interest rates are still pretty high. So there's some things that need to kind of get fleshed out there in terms of macro. But some of the signs that we're seeing now, there's a little bit of euphoria. There's a lot of obviously you look at ETH, and its price basically popped 100% over the last few weeks. So the signals I think are there, and we're in the kind of early stages of what might be the altcoin season. But I still think there's some things that need to be worked out on the macro level that is holding us back a little bit.
Just like previous cycles, Mike, everything starts with the institutions. Last cycle, it was Michael Saylor buying Bitcoin, and that was a catalyst, ultimately translating it to retail FOMOing in. I feel like right now we're kind of reaching the top on the institutional side. What I
Yeah.
mean by that is when you have news like this, NASDAQ listed Tau Synergies buys 10 million in BitTensor tokens for treasury, that feels kind of frothy to me, just a little bit. There's nothing against Tau. I mean, I think if you're betting on AI, not
Yeah.
financial advice, of course, but there are
Yeah.
worse places to look than Tau. But in terms of just, companies aping in and putting this on their balance sheet, it just kind of sort of feels like the top. Meanwhile, on the retail side, you look at Coinbase downloads on the application side, nowhere to be found at the very top. You look at YouTube views, you look at Google searches, all those things are near the bottom. And we're talking about Bitcoin being close to 120,000 and things starting to move a little bit. I mean, it's looking pretty good in terms of the overall potential of the rest of the year.
Yeah, here's an interesting thing that just popped into my head. What if retail? I mean, what if the institutions and these public companies actually lead the altcoin season? So we're looking at these publicly traded companies going lower and lower and lower down the coin gecko coin market cap top 100. Look, you saw, Sailor started with Bitcoin, and then now Sharplink Gaming and acquiring ETH, spending raising billions to acquire ETH. We're going, BNB, Sol, Hype, and now Tau. Maybe we're going to get something like a maybe it's even out there or in the works, like, a virtuals treasury company, and then going lower and lower. And then as these headlines come out, the people truly, the retail in crypto are buying these, are buying them, non-custodially, or on exchanges. And then like that's how, and then, as those numbers go up, they're getting riskier and riskier and riskier. So maybe it's like, maybe, I think we've talked in the past about, the funnel being so different that people are getting exposure to crypto in different ways just through buying the stock of these treasury companies, not necessarily buying the underlying asset. Maybe, maybe the headlines of these crypto treasury companies lead, and that gets people interested in buying more interested in buying the underlying asset, and then that's how altcoin season starts running. I don't know.
And maybe we're in the industry, and so we see these, this type of news every single day. But yeah, maybe the everyday reader is not really quite feeling the kind of frothiness that we feel being in the industry. But
Yeah,
still think
yeah,
that it'll be institutions and then gradually flow into retail. I mean, you're kind of seeing it with the NFTs, like we just discussed, the NFT volume going up remains to be seen. Let's talk about Ethereum, Mike. So looks like Ethereum validators signal intention of upping gas limit to 45 M. What can you tell us about this story?
yeah. So according to this website, gaslimit.pix, nearly half of the validators with staked ETH are signaling that they want to raise the gas limit from which 36 million now to 45 million. And raising the gas limit would increase throughput of the L1. If you look at that chart, it was 49% a couple days ago. Now is at 47%. So the gas limit was last raised in February, which is the first time since 2021. And I think we talked about the Genius Act and stable coins, and large percentage of stable coins being launched on Ethereum. And I think this gas limit, potential gas limit rate, increase is likely comes as this result of increased interest from institutions to use Ethereum for not only stable coins but RWAs and other financial applications. So this poses a couple of questions, and this has been one of the largest debates over the last couple of years for Ethereum, and it got very heated. Obviously, the Ethereum price has popped a lot over the last few months, but it was an extremely debated topic when Ethereum was sitting at 1,800 or 2,000, basically very pretty stable for a couple of years. Is like, what does this mean for Ethereum's scaling strategy? Right, they've been talking about this L2 focused scaling strategy, executing on that with Arbitrum, Optimism, Base, and many others, many other L2s being launched on their Polygon. Now is are we seeing kind of a shift to a new scaling strategy, or does the L2 scaling strategy still take precedence? There's a few questions around that.
Yeah, I mean, regardless of how they do it, I mean, I personally, I'm not surprised that Ethereum has started to come alive. It was just like so suppressed for the longest time. I mean,
Yeah.
people were bashing it as if they just completely fell asleep at the wheel, which obviously is not the case. We just got done talking about the stablecoin volume and the Genius Act. So I still think they are extremely relevant.
The usage was still there, right? Like even though gas costs were low, primarily because a lot of the we were going through meme coin season. Um, in terms of like, and all that was happening on Solana, right? And obviously that has died down. And then now we're going into, what everyone calls stablecoin, RWA season. Everyone's talking about stablecoins, Genius Bill. The narrative has shifted back to Ethereum a bit because you can see that the institutions are, as far as smart contract platforms, are choosing Ethereum over anywhere else. But now here's the question in terms of like the scaling question that I talked about before. You could look at this potential gas limit increase a couple of ways. One is, with respect to the L2 scaling strategy, one is a the increase in gas limit can, so a lot of the activity is happening on L2s, Arbitrum, Base, Optimism, and all of those, the other L2s that are built on top of those L2s. So an increase in the L1 gas limit can facilitate even more L2 activity, right? So it can make those L2 transaction costs even cheaper than they are now. So that's one way of looking at it. The L2 push forward with the L2 scaling strategy. The L1 can now take in and facilitate all of that increased activity on the L1. Or you could look at it like increasing the gas limit is facilitating cheaper L1 transactions, thus minimizing the need for L2s. And of course, taking away all the bridging. You don't necessarily, if you've got cheaper L1 transactions, you don't have to go through all the crazy bridging and all that kind of annoying UX. So I think that's two ways of looking at it, and it's interesting. I think they're kind of at a crossroads. You talk like Vitalik has been very vocal now on implementing ZK and kind of scaling the L1. So I think they're, even though things sound great right now, with the price and the institutional activity, I think they're at a pretty important crossroads on where they go in the future in terms of scaling and how that how that strategy is going to get worked out.
I think ultimately they need to worry about their layer one. I was under the impression that an L2 is more of a short term fix. However, if an L2 can do really well during that period of time, I think they have the opportunity to stand out, kind of like what Polygon did last cycle. Started off as an L2, but then kind of made a name for itself. So I think that there's still that opportunity. Like Arbitrum, I feel like is currently doing that a little bit with their partnership with Robinhood. So I think there's an opportunity for them to kind of take advantage of the situation in the short term. But long term, a big reason why people do like Solana and some of the faster chains is because you can kind of get everything done in one place and you don't have to rely on a band-aid solution.
True, but if you are an institution, or any organization who wants to launch their own chain, or even an application that wants to launch their own chain, you get a lot more of control over how to set fees for that chain or make that chain purpose built, without sacrificing the liquidity, that and taking advantage of the liquidity that the Ethereum ecosystem has, um, by launching an L2 on Ethereum. So you could go to another faster chain like Solana, or Avalanche or whatnot, or even Berachain and upcoming Monad and Mega ETH. But like you don't have that. You don't have kind of the control over your ecosystem, and fees and things along that, like that. Where the fees go, and just kind of control over your smart contracts that you do if you launch your a customized L2 on Ethereum. That's the argument for the L2 ecosystem.
No, I definitely see that argument, and you're absolutely right. I mean, it's a reason why Sony decided to just launch their own chain,
Right.
right?
Right. You
They
talk
didn't
about
want to
Sony.
just
You
build.
talk, like you said, you mentioned Robinhood.
Yep.
You look at Kraken. Kraken has Inc. and
Yep.
Coinbase with Base, right? So they're able to to kind of customize their chain for what they want to use it for, and without sacrificing a lot of the liquidity that's already in the Ethereum ecosystem.
Meanwhile, Mike, JP Morgan has been mentioned before on our shows being into crypto, even though Jamie Dimon himself has been kind of iffy about Bitcoin and saying it's for scammers, this and that.
Yep.
And I think they even have their own private blockchain. But they're in the news today because they are eyeing crypto-backed loans as U.S. regulators ease rules. And this would
Yep.
be not just for Bitcoin. This would also be for Ethereum, from my understanding.
Jamie Dimon just needs to admit he was wrong all along. And he's been secretly building in crypto for many, not so secretly actually, but like, I think he's just been uh very stubborn about his position on Bitcoin specifically. But yes, JP Morgan may offer loans backed by crypto, Bitcoin, Ethereum, maybe more down the road, as soon as next year. Some fintech startups already offer crypto backed loans, but when an institution like JP Morgan, as large as JP Morgan is, as global as JP Morgan is, you have to pay attention to this. And like look at the things that JP Morgan has done. They don't custody crypto, but they're allowing their clients to buy Bitcoin. They're working on their own stable coin on Base. They've had JPM coin for for institutional cross border transactions. They've had a dedicated group within JP Morgan working on blockchain initiatives. So I think it's just I think the man just needs to admit that he's wrong about Bitcoin, and just go full steam ahead on all this stuff.
Yeah, I'm not even phased that they're still working on this stuff. And if it does come to fruition, they will be the first major US bank. Huge stuff. Let's pivot a little bit. Let's talk about some of these projects that are building on the cutting edge of technology. They're securing massive checks. You're on the VC front. You see this stuff on a daily basis. You write a newsletter on a monthly basis. Let's jump into this. What can you tell us about XMTP? What are they working on?
Yep. So they are working on a decentralized message protocol. They just raised 21 million in a Series B round, led by Union Square Ventures, A16 Crypto, and Faction, with participation from Coinbase Ventures and a few others. And so, kind of similar to your SMS or it's a messaging protocol, but in a decentralized. They're building this in a decentralized manner. So they, XMTP is being embedded directly into platforms like Coinbase's Base app. They've got chat. It's not just chat. That's where it started, where you can have a kind of a wallet address and then chat with other wallet address within other applications. But now they're layering some pretty interesting things where you could do transactions through messaging, right? So like payments, trades, like token sales. So they're really extending the messaging past just that conversational piece into more transactional pieces. So I think it's super interesting. They're building this in a very decentralized manner. So and obviously integrating with some highly used applications like Base App to be able to really facilitate these very simple transactions through simple messaging.
I was never really keen on looking at these types of solutions only because you've got Telegram and now you've got Signal, which is also popular. I mean, what can XMTP potentially offer that these other applications that already have the user adoption offered to the public?
Yeah. So what might be able to happen? So those are Telegram and Signal are messaging applications, right?
Yep.
XMTP is the protocol that's kind of like the messaging that facilitates the messaging. It's more of like that this this protocol gets integrated into other applications. It could be integrated into MetaMask or Base App or any other wallet application to facilitate messaging. And I think it can be done. You could probably integrated in something like a kind of a new version of email to be able to facilitate that with just more than just sending emails. It could you can kind of create like an email transaction application. So this is more of the back end stuff. But to your point, you could one of the things of that ton is building with it into Telegram is it's a little bit different, but like if you can do some transactions through a Telegram chat, I can send you some kind of a little bit of ton coin through Telegram. That is what XMTP can facilitate. I'm not saying that necessarily they would work in Telegram, because Telegram and Ton have this close partnership, but it's things like that XMTP facilitates on the back end that gets integrated into other apps as opposed to being a standalone app itself.
And this also shows just the movement that we're seeing, the shift in terms of where chains are going, where applications are going, where wallets specifically are going. So this is the Base app, which we haven't covered this on our show, Mike, but the Coinbase wallet is now the Base app, and it's going to have like a ton of features in it. Very similar, well, not exactly similar, but in the same way Solana is trying to kind of put everything in the palm of your hands through their phone, Base is also taking a slightly different approach with this Base app. So you're starting to see this shift in creating this solution that kind of has the social component, the financial component, like everything in one.
And look, you're looking at it come from the other end, like in on Twitter, right now. Elon is going to integrate payments into Twitter. Is going to integrate poly market and prediction markets into Twitter, right? So you're seeing I think a lot of these companies are going after this kind of super app concept, and in many different ways. With Twitter being more of a social network, with Telegram being more a messaging app, with kind of Coinbase and Base app being more of a wallet. It's all kind of coming from different angles and being built. The audiences are being built in different ways, but and then the end game is building that super app that you can do everything in.
Yeah, and obviously retail isn't fully here yet, but we're setting up shop for them to arrive with open arms. So it's really good to see something a little bit more on the enterprise level. Blockskye. This is kind of interesting. I read up a little bit about what they do, but what can you tell us about them, Mike?
Yeah, they're a blockchain-powered corporate travel platform. They've raised 15.8 million in a Series C led by Blockchain Ventures, participation from United Airlines Ventures. I had no idea that United Airlines had a venture arm. Wow. Faction, KSV Global, and others. So they use blockchain to streamline booking, payments, expense management for large enterprises, essentially cutting out a lot of the middlemen and intermediaries, which what crypto and blockchain is great for. Like travel agencies and card networks. So they claim the platform can cut total travel costs by 14%. They've recovered millions of dollars for clients such as PwC and TripAdvisor. You said you dug into it a little bit more. Like, would love to hear what your thoughts are and what because like I've used some corporate travel programs in the past, and it's ridiculous. There's sometimes like the companies, they force you to use corporate travel software and programs and specific travel agents that get like airlines and hotel rooms at like 3 to 5x more expensive than what you could get if you go to Kayak or hotels.com or whatever to to book. And look, it's obviously it's nice that they're doing it for you and finding all these good good options, but at what cost, right? So I think this is what Blockskye is the problem that Blockskye is looking to solve.
From what I understand, and I'll preface by saying, like, I'm not in this kind of position, so I don't truly understand the pain point here. But just talking to people in the industry at conferences when they travel, a lot of times if they're working at one of the ecosystems, they're working for a chain, they get paid in crypto, and
Right.
so they don't really have an opportunity to be able to have a Visa corporate card, connected to a bank account where that they can use to expense their travels. Because everything is in stable coins and it's in crypto. And so it sounds like there's something missing there in terms of solutions, primarily from the regulatory perspective, right? We didn't have that kind of clarity to offer that solution. But from my perspective, it seems like that's what Blockskye is looking to tackle. Be the crypto-enabled platform for some of these teams to be able to utilize that don't necessarily work on fiat.
Yeah, and I think also, we talk about how crypto alleviates the middleman, right? And I think with corporate travel, there's so many unnecessary parties, to say the least, right? There's this travel agency, there's a corporate hire, there's obviously there's the airline, there's this like expense tool, and the payments can come from all different credit cards and corporate treasuries or whatnot. Like it's just like it seems like this is really flattening that out and taking a lot of unnecessary parties out of the equation.
Yeah, things are moving pretty fast. This next one, a little bit more playful. This is FootballFun, and I'm guessing this is more on the like fantasy sports side.
Yep. So this is crypto fantasy football, soccer to some,
That's right.
not football. Yeah, they raised 2 million in a round led by Six Man Ventures, with participation from Z Prime Capitals, Fermion, and others. So yeah, it's essentially a social sports prediction game. And with fantasy football, typically a fantasy, let's just say fantasy soccer or fantasy American football, right? You're looking at season by season games. You draft players on your
Oh,
team, and then you go against your buddies and based on different stats, right? And this is a little bit more dynamic, right? You actually you can like open up these kind of like packets with players. Player values are dynamic. They can change based on like how good of a season they're having, as well as like trading activity on the platform. So there's a bit of like a financialization aspect of here. So there's real time fantasy sports stats with these like crypto trading dynamics. So pretty interesting. I love kind of the combination of like market dynamics with fantasy sports. I think we a lot of people have tried to kind of combine these things, and maybe not had so much success. So we'll see how football.fun fares here.
I'll check it out, maybe see how the platform feels, and I'll report back and let you know.
Yeah, check it out.
Last but not least, Mike, just want to share this with our audience. So on July 31st, it's a Thursday, 11:30 a.m. Eastern Time, New York time. I'm hosting a small virtual meetup with Dairyverse, which is an exchange that's looking to compete in the market on Solana. And then also Decentral, they are doing uncollateralized loans. And their primary focus, at least initially, is in the LATAM area. And I know here in the States, like we are in crypto. Many of us are in crypto because we want to become wealthy. We forget that there's a large part of the world that their perspective on crypto is completely different. They're using it to actually survive and thrive. And so it's always interesting to get their perspective on how they view the markets, And also DevCon is at the end of the year, and a lot of these talented teams are going to be represented in Argentina. So I'm hosting this event as part of Network Spotlight, which is a community that I run, that Mike's part of, I'm a part of. And so for anybody that wants to sign up to this event or join the community, I'll be sure to include the links in the description. I feel like this was a longer show today, but it was well worth it.
I think we're in the early days of altcoin season. I think everyone is just waiting for that to happen. And yeah, let's see what happens. And hopefully the signals get stronger.
Those that are watching, subscribe to the channel, like the video, share it with your friends, and we'll catch you all on the next one. Thanks so much.
All right, see you, everyone.
If you're a founder or operator in Web3 and want to connect with others like you, head on over to networkspotlight.io and apply to become a member. See you on the inside.